Welcome to FinMet Mondays, your number one podcast for all things gold.
A very good morning to all of our listeners as FinMet Mondays is back yet again from our short summer hiatus. Sunil, welcome back to the podcast, and I'd like to begin by covering some of the developments we missed out on in the last 2 weeks. Firstly, we've seen gold prices come off quite heavily from the highs in August. COMEX itself is trading at around 1720 levels or so. Can you speak a little bit about how the retail demand has changed as a result of these drop off in gold prices?
Yes, the decline in price, especially close to the spot prices of 1700, has created a surge in retail demand. We are seeing demand emerging in China as well as in Southeast Asia and of course in India. The Chinese demand has seen the premiums in the local market go from normal levels of for around $2 or $3 right up to $20, $25 right now. And that's driven by the fact that demand has suddenly increased and supply has not yet come in, and it'll take a couple of weeks before the import quotas are given and then the imports take place. So certainly China is on fire right now. Similarly, India was at a discount earlier and now has turned into a premium market. So that again reflects physical demand and maybe also demand of the season.
Last Friday, we saw that prices actually picked up at the end of the day in light of the fact that we had unemployment rate in the US come in slightly higher. Even wage data cooled off slightly. And traders started, but despite all of this, traders still picked up treasuries and are still buying a lot of the treasury yields. Where do you stand in terms of the prices shaping up for next week for gold specifically, right? Are you of the view that you are going to see some of this bounce back or this rebound in gold prices again, continuing from last week?
I wouldn't read too much into the rebound on Friday. I think the Friday afternoon rebound took place because people are squaring off short positions, and that's why we saw this bounce. And today is a holiday in the US, so that's why people are squaring off some positions. I think right now, when I look at the fundamentals and I look at for example, the ETF holdings of gold in New York, they're at record lows. They're at 973 tons right now, whereas just 3 months ago they were about 100 tons higher. So we've seen 100 tons of gold being sold off in the ETF in the last 3 months, and so it shows to me that the mood in the market is negative and it's still quite bearish. What do you see in terms of the technical levels, Sean?
As for the technical levels, what I'm seeing is we're definitely in a very bearish cycle. I don't think we are still yet come off of the bearish cycle. In terms of the levels where we would be able to kind of reiterate that okay, gold is going to probably bounce back from here. I think that level is somewhere around the 1740 to 1750 range, at least on the spot gold. But as of now, if I look at the indicators, the RSIs, the MACDs, they're all trading with a very negative bias still, and we're going to see that continue. In my view, we're still going to see that continue going into going into next week as well. I think on September 8th, Fed Powell is again due to speak at a conference basically, and that Fed speak is also going to be vital. We already know where he stands in terms of positioning him, in terms of the rate hike positioning. So I think this again, I agree with you that the bounce back is going to be sort of temporary, and we are going to see some new lows being created. Not lower than 1680. I think that 1680 support level is very solid, but we are going to see some retreat at least until the next rate hike announcement. Thank you so much, Sunil. And yes, see you next Monday.
Thanks, Sean.